A lot of you may know that I work for ABC News in Miami, WPLG, owned by actually the largest and most expensive stock traded on the market right now, Berkshire Hathaway, which is owned by who? WB, Warren Buffett, my boss. So he gave me some really good investment advice. Be strong when the market is fearful, and fearful when the market is strong. What's up, YouTube? Welcome back to Talkin Options, where I teach you how to trade options, giving you a better option than the options that you had before. Bars. You guys already know Talkin Options is the first and only YouTube channel to introduce options as a way to hedge your Forex and futures positions. Now, what we're going to talk about today is implied volatility, and we're going to use one of the most volatile currencies traded on the market right now. GBP for my Forex traders and /6B for my futures traders. So let's take a look at the ThinkorSwim platform. All right, so right now we're looking at /6B. That's the British pound futures, and you're looking at a 15-minute chart. Now, implied volatility, what is it? Why is it important? Well, the reason why implied volatility is important is because it is one of the metrics that measures the emotion, the energy in motion of the market. Now, when we think about energy in motion, especially emotion, when we're talking about the stock market, what are some names that come to mind, or some feelings? Fear, uncertainty, greed, anger. These are all feelings or fundamentals that moves the market. Now, implied volatility is very important because oftentimes when it is overinstated, that is typically when we like to sell our positions. Remember the advice that I gave you in the beginning. When the market is fearful, we like to step back and we like to be strategic, and then that's when we like to be greedy or aggressive. And when the market is greedy, when everyone's overstated, that's when we like to be fearful. That's when we like to sell. Looking at 6B, the reason why this is so volatile, of course you guys already know, is because of BREXIT. BREXIT since 2016, when it first came into motion, is the UK going to leave the European Union? Since then, we have seen high volatility in the British pound underlying. Now, the reason why we're starting to see a lot more volatility now, especially, is because it's March 29th, 2019, that they are officially supposed to leave the EU, deal or no deal. So of course, because of this, there's been a lot of meetings and hopeful compromises from other European countries with the UK. When we're talking about implied volatility, the reason why we've seen it lately, take a look at some of the announcements that we have here. So for example, today's March 19th. So right now we're looking at March 20th on Forex Factory. And this is a really good platform when you guys want to check your economic news calendars, but there's a lot of other ones like investing.com, and then there's also Daily FX as well. Well, take a look at this. For example, March 20th, this is tomorrow. GBP, they got the consumer price index that's coming out. And when you see the impact, yellow means that there's a low impact. When you see orange, that means medium. But when you see red, that means that you're going to expect to see a lot of volatility in the underlying. And not only volatility, but because GBP is a very popular underlying, you're also going to have a lot of liquidity as well. So they have the CPI coming out on March 20th. And for this reason, we're going to expect a lot of implied volatility in the underlying. Remember, with implied volatility, basically what it's measuring is the fear and the greed. And whenever we see that, we want to do the opposite. When the market is overstated, that's when we like to sell. When the market is understated, or when volatility is low, that is when we like to buy. So hopefully now you guys have a pretty good understanding on what implied volatility is, why it's an important metric when trading options, and how we can use it, especially when we're talking about fear and greed in the market. Until next time, make sure you're talking options, guys.